For decades, business owners have been able to pass on their business to the next generation without being exposed to inheritance tax. But from April 2026, that will completely change. And the impact on UK businesses is going to be huge. We are all seeing the images on screens of farmers protesting about the tax changes and how it will impact on them. But the same tax changes are going to impact business owners far more, and yet they're completely silent. In this video, you will learn more about the urgent action that is required from business owners ahead of April 2026 to ensure that you are protecting your business from a significant inheritance tax charge and also putting in place an effective succession plan. My name is Ruzwan Boota and I'm a chartered tax advisor and a tax director at I Will Solicitors, which is part of the Wahid Group. And what I do on a day-to-day basis is come up with ways for individuals and business owners to save tax. So let's jump straight into it. For decades, there has been a specific tax relief for business owners which would remove the full value of their shares in their business from an inheritance tax charge, regardless of the value of those shares. This tax relief is called business relief. The intention behind this relief was clear. When the owner of a family business dies, their beneficiaries shouldn't be left facing a huge inheritance tax bill that would force them to sell or break up the family business to cover the IHT liability. As a result, family businesses in the UK have been able to grow and pass on that business to the next generation without any tax issues. However, the government announced in the Autumn Budget 2024 that this will all change from 6th of April 2026. Instead of getting 100% business relief, regardless of the value of the business, this will now be restricted to 50% relief for any value above £1 million. Now, on the face of it, it may not seem like a significant change, but let me show you an example that will put it all into perspective. Let's say that Mr. Khan is the sole shareholder of his wholesale business, which is worth £2 million. Historically, any qualifying business, essentially most trading businesses, would benefit from 100% business relief on death. Therefore, Mr. Khan wouldn't have to worry about passing on that business to the next generation and incurring an inheritance tax charge, regardless of its value. Therefore, no tax problem. However, under the new provisions, if Mr. Khan passes away post 6th of April 2026, his shares in the business will be exposed to a £200,000 inheritance tax charge. Big problem. Now, whilst the amount of tax is already a big blow for the family, now the pressing question is, how does a family pay for it? Unless there is already significant cash within the estate to pay the IHT bill, which, let's be honest, is probably not likely because most people are looking to invest any spare funds, there are essentially going to be four options to pay for the IHT liability. Number one, by either selling the business either during the individual's lifetime or after their death. Number two, keep the business and use the profits from the business to pay the IHT liability over time. 3, sell other assets to fund the IHT liability. 4, the inheritors take out a loan to pay the IHT liability. None of these options are ideal from multiple perspectives, but let me explain why in a little bit more detail. So the first one, let's sell the business either during lifetime or after death. Now you could decide to cash in on the value of the business during your lifetime. Now if Mr. Khan decided to do this, he will have a sizable capital gains tax charge on the sale of the business, as well as a sizable inheritance tax exposure on the sales proceeds received. In the case of Mr. Khan, the overall tax liability will be up to around say 1.1 million, meaning that the overall effective tax rate is around 54% on death. This will leave the inheritors with only 910,000 from the original 2 million, and they've got to split that between them as well. Now know that these numbers are just based on the value of a business of 2 million. The higher the value of the business, unfortunately, the higher the tax charge is. Mr. Khan could also decide to hold on to the business during his lifetime and let the inheritors sell the business after his passing. If the inheritors sold the shares immediately post-death, under the current provisions, there will be no capital gains tax, as there will be a tax-free uplift in the base cost of the shares post-death. Therefore, the only tax liability in this case will be the IHT liability of £200,000 in this example, leaving the inheritors with around say 1.8 million to split between themselves. The second option, to keep the business and use the profits to pay the IHT liability. If the inheritors decide to continue operating the business and use the company profits to pay the IHT liability, the IHT implications increase significantly. Based on a company value of £2 million, the total tax liabilities could be over £440,000. That's a combination of inheritance tax, income tax on the dividends to take it out of the business, and a corporation tax charge on the profits each year. That means incurring a further £220,000 in tax in order to pay a £200,000 tax liability. Note too that if you are paying the IHT installments over a period of time, you also have to factor in that HMRC are going to charge interest each year. And at the moment, on IHT liabilities, you're looking at around, say, 7% each year. At a time when many business owners in the UK are already struggling due to other tax rises and many other factors, this is far from ideal. Number 3, sell other assets to fund the liability. Now, if there are other assets, for example, the home, rental properties, the inheritors could choose to sell those assets and use the net sale proceeds after any potential tax liabilities to settle the IHT liability. This is not ideal as you are selling assets to settle a tax liability, but also there could be practical difficulties of this too, particularly if the only other main asset is the home which the surviving spouse is continuing to live in. And finally, option 4, the inheritors take out a loan to pay the liability. Now, unless there's an asset, for example, a property to take out that loan against, this will likely result in inheritors having to take out a conventional loan rather than a Sharia compliant loan, and therefore getting into riba. And you can ask Habib about what he thinks about that.
Keep it halal.
So why are the government making these changes? Now, we all know the difficulties that the UK is going through at the moment. So instead of letting valuable assets such as businesses pass tax-free from one generation to the next, and as a result waiting potentially a few generations before receiving any capital gains tax or any inheritance tax receipts, the government are wanting to push for those tax receipts to come in a lot sooner so that they can benefit from the tax now, be it in the form of company sales, inheritance tax receipts on death, or even inheritance tax installments over time. So actions that can be taken to address this. Now, there is planning that can be done. I'm going to talk about 3 particular pieces of planning that could be useful for you. The first is to look at the shareholding structure of the company and add on other trusted individuals as shareholders. For example, if you are a sole shareholder of a company, you will only get a single £1 million allowance for business relief purposes. However, for example, if you add on your spouse as a shareholder, you now double that allowance. You've got £1 million for yourself, but also £1 million for your spouse. The only word of warning here, though, is that you should only really add on people as shareholders that you really trust. And also, you don't want to open up these shares to be exposed in the case of any matrimonial disputes. For example, adding on children, typically we advise against that unless you 100% trust them and they are stable in their marriages. Another tax planning idea is to gift some shares into a trust. Now, you have a window of opportunity between now and April 2026 to get in as much value into a trust as you want, as long as it's a qualifying business. There is no £1 million allowance that you have to worry about. So while you have that opportunity, utilize it, set up a trust, get some shares into a trust for the benefit of your children and grandchildren. If you waited until the 5th of April 2026 and decided to do the planning after that, then unfortunately you're only going to get 100% relief on the first £1 million of value gifted into the trust. Thereafter, only 50% relief will be available. Therefore, unfortunately, there's going to be some tax charges if you're giving more than £1 million into a trust. Now, finally, make sure you update your wills to reflect the changes and ensure that a £1 million allowance is being utilised. That £1 million allowance cannot be transferred to your spouse, so it's essential that you utilise it on your death. So make sure you speak to a wills lawyer and make sure you get your wills updated accordingly to utilise that allowance. Now, remember that finding the right planning solution for you and your business very much comes down to marrying the tax solutions with your personal and your commercial objectives. Only when you combine all those things together, then the tax planning can be optimized. So to conclude, the business relief changes announced by the government in the autumn budget last year really are a game changer for business owners in the UK. Gone are the days of delaying succession planning and burying your heads in the sand, hoping that the problem will go away or somehow magically fix themselves. You also have to consider, will my family be able to deal with this after I'm gone? Look, it doesn't look like inheritance tax is going away anytime soon. HMRC will be waiting to take a chunk of that value away from you and your family. If you need any support or if you have any queries, feel free to reach out. I look forward to seeing you all on the next video, inshallah. Assalamu alaikum.